Hello, trading is closed on March 25th, 2019. Let's go over our calls. We got some things right, some things wrong. What we got right was calling the market reasonably well. We'll go over that in a minute. What I got wrong was I had the wrong date. And what I really got wrong was not knowing the difference between a website and a channel. These videos aren't on a website, they're on a channel. I don't really have a website. I do sometimes post on this website, which belongs to somebody else. I don't post every day because I still work part-time. Well, let's go over our calls. We said the market was going to have an early low. We got that. Tomorrow's pattern has the early high. Most of the time it's a rally day. Closes near the high. When it fails, it drops in a straight line. Next thing we said was the market was vulnerable to gapping up at the open. Futures gapped up smartly, and we didn't really gap up at the open, but we gapped down and promptly traded into positive territory, which is close. Vulnerable to gapping up and guaranteed to gap up aren't the same thing, so that's reasonably close. We said the ideal situation would be to have a steep drop in futures and then completely recover it, which could lead to a good rally. We got a steep drop. We almost recovered it at the open. So again, close, but no cigar. Let's go over the patterns from today. When the market's trending, you don't need systems. You don't need signals. You just go with the flow. When it does this, that's when systems like MEJT do their stuff. Said this drop was false and prices would retrace. Said the rally was false, they retraced. Said this drop was false, we go over this line, meet resistance there, and we did. And nothing more for tomorrow. So we have mixed indicators. There actually are a lot of positive things in this chart, but a few negative ones too. Here's that's not what I want. Here's your volatility index. You've gone over the upper Bollinger Band, then gone under it. It's often a sign of a bottom. We haven't. This is the old volatility index, which I find to be more accurate. We're bar completely over the upper one. Almost always, not always, almost always. That's a sign of a bottom too. This is a support level based on somebody else's work, and here's the retest, and that held. And this pattern usually leads to lower prices when it doesn't close near the high. We got lower prices, but it usually leads to more of a plunge than that. Now here was where we had the FOMC announcement. You went up 20 points. Typically you want to go over 20 points under it. We traded 15 points under it. I have seen these things fall a few points shy, unlike the MEJT indicators. It's possible that that's all it is. We're going over this number again. If so, ideally, we want to overtake this high, but if this one falls a bit short, the rally here can fall a bit short too. So all those are positive things. We also gapped down, hit these lower lows, just couldn't take them out. What's negative is you had an early low and all-day rally, can't take out any of these highs. We also have a pattern we thought marked the end of the rally. Things looked pretty good because of the wave count, in addition to other stuff. Here was our count. It makes pretty clean numbers and Fibonacci stuff. But that's not the only way to count it. Suppose 3 is over here. If 3 is over here, you've got an ABC for 4 with nice Fibonacci ratios right at this low, which, as I say, is a support level based on somebody else's work. When I risk money on these things, I like to have slam dunks, and this one isn't. I think the pattern is going to be a lot clearer after the first hour of trading. I know what I'd like to see. That doesn't mean I'll get it. What I'd like to see is this low hold, a rally day with the rally falling short of this high. But I'm certainly not risking any money on it just because I'd like to see it and because it would make good sense to me. It's just going to call it a pattern that I could explain a move in either direction. Usually you'll gap outside the range. If not, you close, it'll change. But usually and always aren't the same thing. We're going to wait for more confirmation before risking any money. And if we don't get a weak rally, then some of my other assumptions are going to have to be challenged. If we gap under this low, I can explain that too. But if we take this high out, as Ricky Ricardo used to say, Lucy, you got a lot of splaining to do. So we're looking for the pattern with the early high, usually a rally day. I'm hoping to see a weak rally, but it certainly isn't a lock, and I'm not going to risk money on it, and that's today's call.